watching. Welcome to the, I guess, afternoon session for the crypto token Hong Kong perspective panel. We have some really fabulous speakers, industry leaders in many regards. And my name is Max. I'll be the moderator today, asking some questions, facilitating the conversation. My own background, I used to be a data scientist in California. I came to Hong Kong and worked for two Hong Kong family office investment groups. Then I looked at the digital asset investment space for one of the groups. Had a chance to meet some incredible folks there and see a lot of the international crypto landscape. And most recently, I've been thinking a lot about the intersection of sustainable finance and the blockchain digital asset ecosystem. So maybe Hugh, you can go first, and then we can have each person give a short personal introduction.
Yeah, sure. Won't be too long. So my name's Hugh Madden. I'm the group CEO of a company called BC Group, which is the listed parent of one of the world's digital asset powerhouses, OSL. So I've been in this industry 20 odd years in investment banking and about 80 years now in digital assets and crypto. Funnily enough, also have a very heavy side interest outside of my day job in the sustainable space as well, especially as it relates to digital assets. One thing about OSL is the first firm to have received SFC's Type 1 and Type 7 license, a dealer broker and an ATS license, and that includes the ability to deal in security tokens. So we're particularly excited about this year and the opportunities that we see will come. And I'll stop there.
Perfect. Thank you, Hugh. And Henry, you want to go next?
Excellent. Yeah. Thank you, Max. And thank you, Hugh. I'm very happy and very excited to be with you all today. Especially with Max and Hugh Greed, pillars of the community in crypto in Hong Kong. Super excited to be here. My name is Henry Arslane. Really, my passion, my focus in life is the future of the financial industry and the future of money. And I'm very lucky to do this wearing many hats. One of them is as the PwC's global crypto leader. Second is as a adjunct professor at the University of Hong Kong, where I teach courses on fintech and crypto, as well as an author. Here's my last book called "The Future of Finance," as well as many others, sitting on many advisory boards and other functions on a civil society and the crypto industry. So very excited to be on. Anyway, thank you. I know there's a lot of choice of panels you can attend, so thank you for being on this one.
Perfect. So I wonder if we want to have Eduardo or Thelma say any words, or we can kind of dive into our panel discussion.
I think it's safe to get started.
Okay. So maybe we can start with Henry. You actually get to see a lot of different types of companies, and especially this year, with the last 6 months, I think your amount of inbounds has actually probably skyrocketed. So can you just give us a sort of landscape view of where you think, both the institutional front as well as the investor front in Hong Kong and maybe in a general region, where has that appetite really been? And do you see a market shift in perception around, this whole topic of crypto?
Absolutely, Max. It's a great question. First of all, as similar to you, I've been in Hong Kong for many years, and I continue to remain very bullish on the crypto ecosystem in not only in Asia, but in particular in Hong Kong as well. I think in Hong Kong, the landscape has been very interesting to watch. While many of our viewers may remember in the early days, obviously, Hong Kong was early, let's say, the training ground for the crypto ecosystem. But really, I would say the shift that we have seen in the last couple of years is really a big trend toward the industry becoming more institutionalized. I mean, having BC Group, which I really find is one of the leaders globally, not only in Asia, globally, is a great example from that perspective. And this is, I think, a couple of trends we've been seeing. One of them is the regulators. The SFC, the Securities and Futures Commission, which is a regulator in Hong Kong, which I actually have the honor of serving on their fintech advisory group, really has been kind of pioneering within regulators kind of a lot of crypto regulations. Within IOSCO, the chairman of SFC is the chairman of IOSCO, and there's been obviously a lot of push they've been doing on that front. But however, there's been a policy perspective, a very clear focus on the institutional front. I often tell people, if you want to set up a retail-focused crypto exchange, crypto business, if you want to stay unregulated, you should not do it in Hong Kong. If you, however, are looking at satisfying with the pretty stringent requirements where the bar is quite high, Hong Kong could be quite interesting for you. Now, the rules for crypto funds, the rules for crypto, let's call it crypto exchanges, are pretty clear. Again, not everybody's happy, but again, the bar is quite high from that perspective. So I think that's what we see on the institutional front. Second, I would say is really the institutional investors. As you mentioned, Max, some of the work you've been doing with family offices. I have to say, I never cease to be impressed by the amount of capital that is around Hong Kong.
Henry, I think we froze for about 3 seconds. So we heard you up until you never cease to be amazed about the amount of capital that is in Hong Kong. And then
never cease to be capital in Hong Kong that is going into the crypto ecosystem, and mainly from family offices and other groups. So I think that remains very interesting to watch from that perspective. So that's and third and last, very important, is a community. I think it's very interesting for anybody that comes from outside and looks at the crypto ecosystem. The crypto community in Hong Kong is very, very strong. I often say that, with the FinTech Association, where Hugh was the co-chair of the blockchain committee for a long time, we set up one of the first best practices for ICOs in 2017. And over the years, there's been numerous pieces of work that have been done, and as an ecosystem, as a community coming together. And I'm very happy to see now, after all these years, groups like BC Group and others who have been really now at the cutting edge of the industry and still have not forgotten and still
yeah. So I think we heard you up to the end. I'm going to extrapolate and say that you're saying that has still not become detached and is still very actively part of the community. And here we have a perfect segue over to Hugh. So what we see markedly different, I think, this particular new global awareness around crypto actually is that compared to the 2017 wave, it is actually institutional driven, and there are significantly more players who sort of believe that there's an economic reason beyond just the sort of chasing of gains. And as an operator that has gone through the long and arduous journey of being effectively regulated by a major regulator, one of the top regulators in the world, and then complying with that regulation and still building a very successful business, can you share a bit of, I guess, first, the original strategy that BC Group took to go down that path, right? And compared to, I think, the sort of fly-by-night activity that happened and sometimes was very commercially successful. And then the second is, what advice do you have for companies thinking about the regulated digital asset routes, right? How can they what should they look out for, and what can they expect to happen once they earn the endorsement of the regulator?
Right. So yeah, this is a a big question, Max. That one, there's so much to talk about there. So why don't I start on our own journey? So myself and some business partners, we took over a public company some years ago. I think about 3 years now, and after we had taken over that public company through a general offer process, we looked at what lines of business we could introduce to improve that business, and one of those was the digital asset business. So we felt that in this industry, it's very hard for larger institutional and regulated players. It's very hard for them to find a counterpart that they can onboard. Their compliance teams will accept, their credit risk teams will accept, and will meet all the very stringent requirements that they expect in a counterpart. It's very hard to find those. There's only 2 or 3 in the world, frankly, and typically a listed company with a decent sized balance sheet provides a much more sizable counterpart, which is safer to trade against. So first of all, there was that. The next part is we believed that there's a large mountain of capital that has yet to enter this market, and the reason for that is it's all held in regulated asset managers, retirement savings, superannuation, all these sorts of schemes. That's where the bulk of capital that could be allocated into the space is sitting. However, regulated asset managers, they're regulated and for a purpose. They need to protect the consumer. On top of that, they've got very stringent money laundering regulations. So they simply could not access this marketplace. They could not touch this instrument through existing venues and players in the market. On top of that, clearly, as we saw through 2017, aside from the kind of misallocation of capital, there was definitely some consumer protection issues that we saw in that period. So also we saw that regulation was inevitable. It's coming. This is very much a financial market, and as it grows, it's going to be regulated. So these two factors for us led us to the view that it's a long game. Playing a regulated game is a long game. It takes several years, probably I'd say 2.5, 3 years worth of work, just for this particular license. And but it's we see it as a huge prize. And I wrote a piece a couple of years ago saying it's the changing of the guard. And what we've seen, in fact, in the crypto space, year after year after year, market share can go from one leader to the next, sometimes very quickly as events take shape. We saw that from Mt. Gox. We saw that many, many times over the years. And our view that next event is imminent, and the next one of those changing of the guard events is the fact that in almost all major jurisdictions, if you're not licensed, you won't be able to serve consumers. And we've seen that play out as a lot of the unregulated exchanges exit jurisdictions quickly all over the world. So that was our strategy, and it's not a strategy that you could necessarily do, without access to capital markets and without enough runway. It's a long-term plan, and additionally, it's a very expensive plan. The level of regulated that you can argue is proper. At the end of the day, we're talking about protecting consumers. The amount of theft, cybersecurity issues, fraud, lack of market integrity, the amount of issues we've seen over the years, clearly the consumer does need to be protected. The problem with that, though, is that to be regulated and have the capability to provide that necessary consumer protection, that's a very high threshold. We end up looking very much like a traditional institution. So, and this is a bit of a double-edged sword at this stage. So it's very good for consumer protection and market integrity and money laundering laws and so on. But on the other hand, it also prevents small innovative shops entering the space, and as a result can take away choice and take away innovation that the consumer would otherwise benefit from. So I think I did write another piece. However, I'll stop in a second actually, but I did write another piece to share a view I have that maybe it's not all bad in the sense that with innovation. So what we're seeing is players who just don't have the size and scale to go and be regulated as a centralized exchange. A lot of these sort of players are turning their innovation towards so-called DeFi or decentralized finance. And what that's really talking about is when there's no intermediary and all the financial tools and systems are embedded in these public blockchains, much the same as being embedded in the fabric of the internet itself. So the small innovative shops do seem to be following a trend of focusing more on DeFi, and as a result, there's an enormous amount of retail level choice and innovation and entrepreneurship going on in that space. But I'll stop there.
Thank you so much, Hugh. And I just want to quickly follow up with one question, and give the floor back to Henry as well. You talked about the license being a prize, and I imagine that actually having this license creates a different set of market opportunities than pre-license. So do you want to share a bit of the type of requests and collaboration opportunities that having a license allows you to unlock? And where do you see that ability to provide technology, sophistication, security, right, for traditional finance companies evolving?
Sure. Yeah, sure. So earlier in last year, rather, we announced as part of our results that our client base, something similar to had evolved from 25% retail to 75, from 25 commercial to 75% commercial and professional, like as a client base. Huge shift in the makeup of our customer base. But on top of that, like our focus is these large regulated institutions, and whether it's giving them a safe and secure trading venue and custody solution, or whether it's actually helping them offer those products to their customers through our software as a service business. And so, earlier in the year, we heard that DBS has released Digital Asset Exchange, and we were very, very pleased to be able to announce that we are providing technology into DBS to help with this product. Now, there's a number of other very, very similar customers that that we've announced or that we work with, and many, many times the conversation has been, if we were, years ago, we were running smaller private companies in this fast-growing space, smaller companies, and could we have engaged? Would we have won your business? If it was 20 people in a private company without a license? And the answer is no. We could not have even looked at it. And so there is a different size and scale now operating in the market, and seeing institutions like DBS take products to the market. Obviously, DBS, Fidelity, Stand Charts made announcements. It's just very clear, like institutional participation has arrived.
Thank you so much, Hugh. And it's really a huge hallmark, I think, of the successful, fintech innovation landscape of Hong Kong, that, we're able to see you grow a company from the beginning, early days of, being one of the first exchanges available in Hong Kong to actually access this new asset class, now to becoming, the technology provider to the largest financial institutions in the world. So congratulations again, and we really look forward to learning more from your journey.
Thank you.
For Henry, I think PwC historically has been seen as the people who come in to make sure your everything is sort of airtight, right? Like there's a very strong audit and compliance service arm, and as the leading voice of new technology, especially in the disaster space, you must have an interesting dynamic with the internal team and also the externally, being able to build new practices for PwC. Can you speak a bit about, navigating this dynamic, and then also what are some exciting use cases you see your clients being able to develop, right, with your guidance, advice, and support?
Yeah, sure, Max. A good question. I think, one thing that, as you mentioned about the importance of regulations, I really believe that whether you like it or not, some of these large, like the Big Four, for example, have a very critical role to play for the industry to go from 1.0 to 2.0, the crypto industry to go 1.0 to 2.0. We may think audits are very stupid, and I agree the way we do audit right now, financial audits, is very old school. I totally agree. Even you can think about how we do accounting with double entry accounting is completely outdated as well. But I think for us, for the industry to go to the next stage, to get these institutional investors, these family offices, large hedge funds, large pools of capital, we need to have that institutional base. I always say that actually one of my things this year, we'll see less people dressed like us, but actually more people dressed in suits. And I think that's actually positive for the industry. So I think that's one thing from that perspective. Again, being a lawyer by background, I believe in the importance of regulations for that stage of the industry. But second thing, I think for all the Big Four, and I tell this to a lot of people, I really believe the next decade, we're going through the roaring 20s. And actually, as important as entrepreneurs like you who have been built businesses literally from nothing to listed companies today, the role of intrapreneurs has become even more important. People now who will be able to change these organizations and be the game changers internally. And PwC is a great example. It's a 165-year-old firm. It's a dinosaur in many regards. Again, it's an audit, it's a partners, it's a pyramid model, and it's been like that for many, many years. And I really believe organizations like these will need to change. One thing often people don't know about the Big Four, it's actually very entrepreneurial. As anybody who comes in as a Big Four partner, you pretty much build your business, right? And there's obviously very stringent risk management and policy and guidance around that. But actually, you have the liberty of actually trying what you want to do. And of course, you have to be successful to it, or else it gets cut pretty quickly, like any organization. So I think there's these things, and I think we were very lucky when we set up this crypto practice. I still remember when we set this up in 2017, everybody was like, yeah, Henry, good luck with your Bitcoin thing. And of course, it became a big success right now. But I still believe that this, what we did in the Big Four at PwC, in my case, this will need to happen in the big banks, in the big audit firms, and everywhere. The advice I give to a lot of my students at the university, you can be an analyst today on a trading floor or the back office of a bank. Your job is to make sure that everybody organization knows you're that Bitcoin guy. Make sure you have a copy on Bitcoin on your desk. Make sure you have like a stickers of Bitcoin on your computer, because what I guarantee you, your organization will sooner or later, probably sooner, get into the space. And when that happens, what's the first thing they need to know is find out who internally knows about the space. And your job is to get that phone call. And that actually, I think from a career perspective, whether you're a junior and whether you're any kind of role you're having right now, this could be your escalator for you in your organization, right? So if you're doing sales trading today, you're the analyst who's building the DCF models. But actually, if your guy knows crypto, there will be a team on crypto in your organization. I guarantee you, whether it's a family office, Max, we're mentioning, whether you're a VC, whether you're a bank, whether you're a service provider, whether you're a lawyer, I think all these organizations will need to change. So I think it's a great time for entrepreneurship and even better time for intrapreneurship. And that makes, I think, the next couple of years super exciting.
Thank you so much, Henry. And I think PwC is super lucky to have you to be their resident crypto expert and be able to help them navigate this rapidly evolving space. I want to spend the last few minutes of our panel talking about the giant neighbor next door, which is China. And China actually has taken a very interesting and rather sophisticated strategy to both its regulation and approach to what blockchain means for the country. So on one hand, there's been increasingly more governance around the money flow and be able to run unregulated exchanges. On the other hand, China's launched a national blockchain strategy. The president of the country has actually declared that to be one of the leading initiatives that he wants to drive. And also, China's pushing forward on the digital bank central bank digital currencies. So I'd love to get both of your takes on what you think is happening there. What do you think that means for the financial system that we live in, and also what other countries can do in response to that. Maybe Henry, you can go first.
Sure. No, first, I think for anybody looking at the future of money right now, you need to have an eye on China. China is years ahead of any other country. The best example is on central bank digital currency and the CNY, ECNY. There's various names now: e-renminbi, digital yuan, DCP, but ECNY is the one that tends to be consensus now. On that front, China is years ahead. As we know, the PBOC has been researching this topic since 2014. So for a very, very long time. And just to put things in perspective, in the latest phase of the ECNY, over 2 billion renminbi of transactions, that's 300 million US dollars, were made in 12,000 use cases. 12,000. And there's over 100,000 wallets that have been done. So there's a lot of activity going on. Even the last weekend, there was a lottery actually in Shenzhen where, 20,000 people got 300 renminbi of literally, this is a third form of central bank money, digital renminbi that we're able to use in 10,000 outlets. So there's a lot of activity going on. It's been very interesting. I've been living in China before actually Hong Kong. I used to live in mainland China. I believe it or not, I did a master's in Chinese law in 2006 at Tsinghua, where I know Max, you studied as well. And I think it's been a very interesting journey for what's happening in China, like everybody knows. But I really believe that over the next decade, yes, China has gone through a massive evolution in the last decades, and it's been quite spectacular to see. I think when it comes to future of money, everybody who's focused in this industry, you need to have an eye on the space in China because it's very important. And of course, Hong Kong, I'm sure Hugh can talk about it, has a big role to play in this space as well.
Thank you. Hugh?
Yeah, thanks, Henry. And yeah, it's certainly pretty exciting, and it's hard to argue. You just can't, in fact, that anyone has the edge over China when it comes to the pace of technology innovation, particularly in fintech. I think years ahead of most of the world. And it's not, first of all, if we talk money and payment for goods and services, and SWIFT has really dominated the world internationally for a long time. But SWIFT is quite centrally controlled, and it doesn't necessarily fit the way SWIFT is structured as a payment network all over the world. It doesn't necessarily fit into the current geopolitical climate, where we're looking at reciprocal treatment between superpowers. Yes. I believe that's the future, and the way international trade is conducted and paid for will evolve to something that suits that model. And so we're seeing the rise of digital payment networks by most central banks. I think I heard a quote today on something like 80% of digital banks are undertaking such programs. Now, it will feature heavily, but in a much more modern, decentralized fashion, where you don't have like honeypots of any one country controlling or monitoring all of the information. And so I think it has a very strong role to play going forward. And that will be some, pretty interesting geopolitical scene as that shapes out over the next decade. On top of that, though, it's not just limited to money. On top of that, high pace of innovation, you know, in fintech in China, almost certainly we'll see that start to move into their financial markets as they open and grow and the middle class grows. I expect to see China have a faster evolution of new asset classes. Now, with a highly technical, you know, born digital generation emerging into that scene, and having blockchain largely making financial markets infrastructure just part of the fabric of the internet, I think there's all new forms of financial market products, not just money. We will see evolving, whether it be through so-called you know, so-called security tokens and similar type structures. So I kind of expect to see that over the next 3 to 4 years. I see a large pace of change in new and innovative, you know, purely digital asset classes coming out of China as well. Now, if I can just touch topically on this topic, the topic that we're seeing change. We're seeing change in our financial markets infrastructure, and we're seeing changing behaviour as the born digital generation grows into our new middle class. What happens to all that old school, old regulated, slower moving institutions that frankly will take 50 years to modernize themselves? And that's where a very interesting topic called de-tokenization comes into play. So, and when I talk about de-tokenization, so obviously Bitcoin, the most well-known of these, but structures that take purely digital assets and structure them into a vehicle that can then be listed or traded as a traditional security with all the same old traditional processes and infrastructure. It seems wacky. It seems crazy. Why would you do that? But it has a large role to play, and that's gatewaying all of the regulated asset managers into these new and innovative products that are coming in, that we'll see coming out over the next few years. So there's so many different angles to this space.
Thank you so much, Hugh. And I think, you know, you have a wonderful, deep technological background, actually, you know, on both the sort of computer science as well as the financial sector. So you can sort of see the tea leaves a little bit about, you know, where you think the efficiencies and inefficiencies can be done. So I think that wraps up our panel. I'm really, really grateful for both of our amazing panelists to stay up late and share their wisdom with us. I want to reiterate that I think Hong Kong, you know, remains an incredibly exciting place to be. It has this, you know, very powerful mix of entrepreneur energy, you know, sophisticated market professionals, and also regulators who can understand and also enable, you know, innovation as well. So hopefully all the audience members can stay tuned for new exciting things. Please connect with Henry and buy his book. If you want to be, you know, discovering how to, you know, build a successful career in the, you know, emerging disaster space, I think he's, you know, like none other. And if you are any large financial institutions wanting to get your feet wet in a, you know, compliant and also, you know, efficient manner, I think BC Group is your #1 go-to partner.
Thank you very much. Thanks for having us. It was a pleasure.
Thank you, Max, Henry, Hugh. Thank you.